The money you put in your bank account, there's service charge in those things. In accounting, it's called finance costing. There are different expenses that come from your bank. E.g., let's say you are lending money from a bank to run your business. At what rate are they lending that money to you? At what rate are you paying back the interest to either the bank or the lender that have given you this money? So you need to understand your bank rate. And the next one you need to put into consideration here is the depreciation rate. Now, most persons don't understand depreciation. Depreciation is a very vital part of business. Depreciation just shows the tearing and wearing away of an asset over a period of time. Depreciation value, depreciation rate for let's say a laptop can be 25% or 30% because it's used often. While depreciation rate for an asset, let's say a house, a car, a landed property, can be 5%. It depends on what you want. So there are different depreciation rates. We have liability and depreciation rate. We have motor vehicle. We have furniture and fittings. We have house. We have plant and machineries. We have different depreciation rates for this. Some go for 25, some for 15, some for 10. You need to ask a financial accountant or anybody that is into accounting around you to put you through that. Then the next one you need to ask yourself will not be your operational cost. This is where most persons don't understand when it comes to financial forecast. You need to first and foremost clearly understand and identify your operational cost in your business. Because when you're unable to track this cost, it takes away your working capital and bring a dip into your operations. What are those things that make operational costs? You may want to ask and wonder is, let's start with definition. Operational costs are those costs that are recurrent in your day-to-day business transactions. It can be monthly, it can be daily, it can even be hourly. But these costs form a big part of your financial model. Now, come here and ask yourself now, what makes operational cost? You can look at your cost for raw materials, your salary and wages, your maintenance expense, your promotional expense. You run Facebook advert, you run social media campaign. These are operational costs. So by the time you form these things together, e.g. your loan service repayment, these form your operational cost in your business. In all you do as a business or as a startup or already established entrepreneur, ensure your operational cost is always monitored. Reduce this cost by all means, but not at the detriment of the welfare of your staff or producing counterfeit productions because you want to bring this cost down, because there's some costs that you must incur, e.g. direct cost, tax. These are costs that comes often in your business, but you must create way for that. The next one you'll be looking at will now be your sales volume. I'm still talking on assumptions now. What is your sales volume monthly? It's one thing for you to have a fantastic idea. It's one thing for you to have a good business plan, but you need to understand what is your sales volume. Are you into business coaching? Are you into consultancy as services? How many clients can you sell those products to monthly? You need to understand these things. Are you into production? How many cartons of goods, items can you say we sell in a week, in 2 weeks, in 3 weeks, in 1 month, in the first quarter, in the second quarter, in the fourth quarter of a year? That's why you need to understand what your sales volume. The next thing you need to bring into assumption will now be your unit price. You ask yourself, at what cost is a client willing to pay for that value you are creating through your business platform? You must understand first that whatever you are producing, either as product or services, you already have an audience in mind to feed with that solution. You need to now ask yourself, at what cost will they buy this pen? That now brings about your unit price. Then the next one you need to look at again, what is your working capital? This working capital is very key. How much will your business need to kick off? Because if you don't put these things in place, then your business is bound to hit the rock. That's why I tell most persons during my business session with them that the fact you have 100 million naira in your account is not a yardstick that you're going to become a successful business person. I'm not a prophet of doom, but I've seen most persons that have finances. Okay, I have some persons in my coaching system that are retired pensioners. They get their funds from their retirement and they blew the money up. Why? Because they lack this particular plan in their budget.